Hey everybody, I hope everyone is doing well and had a good day. And in today's video, we're going to review the E-mini S&P 500 5-minute chart for Friday, August 7th, 2026. Daily chart higher time frame context going into the day. Strong bull breakout, but pair of bear bars here, bear reversal bar, a small follow-through bar. The expectation is that this reversal is minor. The rally is strong. Even if we pull back first, the bulls are probably going to get a second leg up. But now we have a pair of bear bars, and it's probably disappointing the traders who bought up here. You can imagine the gap up from the close of this bar to the open of this bar. Traders buying up here are trapped by the reversal down and then follow through. And that creates resistance above. Then we have a bad buy signal bar yesterday. So the expectation here is that there's probably sellers above yesterday's high, this bear breakout or this reversal and follow through down. Strong enough for a small second leg sideways to down, but unlikely to be a major reversal. So again, we might find sellers above yesterday's high, but ultimately maybe then the bulls get a high 2 bull flag and an attempt at trend resumption. The bull breakout is too strong to expect this reversal to be strong enough to reverse it. Five-minute chart. Gap up going into the day. Remember, a gap functions like a breakout. So here's a lower trading range. We talked about this yesterday. The market gapped far above all these bars in this trading range to the left and then had a follow-through bar, bar 1. Strong enough gap up, strong enough bull breakout and follow-through that it'll probably get a second leg up. The traders selling at the top of this range, in theory, here get trapped by the gap up and follow-through. So there's trapped bears below looking to buy back shorts, and the bulls who did not buy are trapped out looking to capture a second leg. They are trapped out of a winning position. Inside bar 2, probably buyers below, expecting a second leg up. Bull breakout 3, but testing yesterday's high. Expectation is sellers at yesterday's high. But so far, the approach is fairly strong. The gap up, and it's a micro channel to bar 3. So the first reversal down will probably be minor. Finding some profit taking from the bulls on bar 4, trading range bar, probably sellers above. There might be sellers below, but the signal bar is weak. And the momentum is strong enough that the first reversal will probably fail. And once again, the bulls will probably get a second leg. 5, trading range bar. It's an inside bar and a smaller bar, probably sellers above. And as far as buying below the bar, because of the context at yesterday's high, which is acting as resistance, it's not ideal for buying here. It's possible we have to pull back first. Plus, bar 1 is currently the low of the day, and it's unlikely to remain the low of the day. About 20% chance that bar 1 will remain the low of the day. So more likely, it's going to be a trading range on the open. Look at all the overlap. Bull bar, bad follow through. Bull bar, bad follow through. Inside bar. So it looks like the market's behaving like a trading range. Big breakout bar 6, testing support the bar 1 low and bouncing, but strong enough breakout bar, probably going at least a little bit lower. 6 will probably get a second leg down. 7, it's possible that 7 is the second leg down. 1, pullback 2. But now it's a bear micro channel from 4 to 7. So the first reversal attempt back up will probably fail, and the bears will probably get a second leg down. Weak reversal attempt on 8, testing support, but bad stop order buy, probably sellers above, probably going at least a little bit lower. Again, expecting a second leg down, but still expecting a second leg up. Remember, this rally from gap up, or you could say from bar 77, technically pulled back here. So tight channel from bar 77 to bar 4, breakout on a higher time frame. This is a minor reversal. The bulls are still expected to get a second leg up. I have the top of this trading range. I have a horizontal line drawn here to show that this was resistance, but when we broke above it, now the expectation is that this price area will act as support because of the trapped traders I talked about earlier. 9, bear breakout bar, another bar added to the micro channel. That's good for the bears. For the bears, you can count 3 pushes down, 1 pullback, 2 pullback, 3. So we might bounce here, plus we're testing that support, but strong enough sell-off that the first reversal up will probably be minor. Then we got a huge bull bar on 10, surprising bar, strong enough breakout, trapping traders down here. It's probably going to get a second leg. Not an ideal location for buying because we're testing resistance once again, where the last time the market was here, we sold off for a lot of points and 3 or 4 bars. But 10 is a strong enough bar. You know that there's trapped traders down here, and it's probably going to lead to a second leg up. Plus, we talked about this, the bigger tight channel, 77 to bar 4, bull breakout, maybe a 50% pullback. The bulls may be getting a second leg up here. Small follow-through bar at resistance. It's a bad stop order sell, so there's probably buyers below the bar, but not ideal. Not ideal for selling because of the momentum. It's probably going to get a second leg up. Context is okay because we're at resistance, but better to wait for a second entry short. And 12, another breakout bar, 3 bar micro channel, good for the bulls. Probably will get a second leg. Even if a trader buys bar 12, what's the problem with buying the close 12? Well, the bar's big and the stop technically is down here in theory. So your stop is far, the risk is big, but you know you have high probability of getting a second leg. So even if you buy the close 12, you're willing to scale in lower, you're probably going to make money. The first reversal down will probably fail. Disappointing entry bar for the bulls who bought 12. Bar 13 is a bear reversal bar, closing near its low. Just imagine you bought the close 12 and your entry bar is 13. That's disappointing. So probably sellers near the close of 12 or at the high of 13. And then 14, a bear breakout bar. Now it's a reversal and follow through, strong enough to disappoint traders. Again, the traders who bought bar 12 are trapped. Strong enough opposite signal that this will probably get a second leg sideways to down, but the problem is the bullish momentum. The traders who were selling here, we talked about this, being at resistance. So some traders sold above bar 11, which was reasonable. Of course, there's the bullish momentum. Maybe a second entry short would be better, but a trader that sold above here got trapped by bar 12, and then they may be buying back shorts here or somewhere in this area created by the support. But again, strong enough reversal, follow through 13, 14, expect a second leg sideways to down. Both sides expected to get a second leg. The bulls probably will get a second leg up. The bears probably will get a second leg down. Doji 15, probably buyers below, maybe sellers above. The bears get a second leg. It's a situation where the bull breakout is stronger than the bear reversal, so we're probably going to get a second leg up, and the sellers may wait to come in up here somewhere at the high close or a new high. And then 16 breaks the bear trend line. There's a bear trend line in theory, 3 bar micro channel here. Bar 16 breaks that trend line. Now there's probably buyers below 16, which we trigger the buy below, and then the bulls continue to resume up here, 18. Tight channel, 15 through 18, probably buyers in the buy zone of 18. But as we approach resistance, like I said, there's probably sellers around the close of bar 12. The market pulls back, traders buy, and we're continuing up in a tight channel here. 20 is a bad stop order, sell, buyers below come in. 21 testing resistance, expect sellers above here. Pulling back again, but still a tight channel, not a great sell below 22. Bull breakout bar 23. First bar closing above all the bars to the left. So the question here, Can the bulls get a follow-through bar? And one of the problems for the bulls is it's a nested wedge. 1, 2, 3 legs up here. 1, 2, 3 legs up here as well. So bulls are probably taking profits as we break out to a new high. You can see they're not buying strongly on bar 24. It's a doji bar. If the bulls were buying with strength, we'd get another bar like 23, but instead, trading range bar. Once again, nested wedge. So some traders might exit below 24. Not a great sell signal bar, but the context suggests we may pull back here. And then 25 is a good sell signal bar. Reasonable bar for bulls to exit below, and reasonable stop order sell. It's against a tight channel, so it's not a perfect trade, but you do have good risk reward, and the context, like I said, suggests that we'll probably at least get a pullback here. Also, a bigger picture at this point in day, it's possible that it's a bull trend day, trading range on the open, with the probability that it's a trend day is reduced by the sell-off on the open, then a big breakout, but then a pretty strong reversal. 13, 14, the selling pressure here is strong. So it's possible that we have a bull trend day, but think about the higher time frame context, and there's probably sellers above the prior day's high, which we're breaking above, but then testing, trying to break above again to a new high, but not getting strong follow-through. Weak stop order buy 26, probably sellers above. Tight bear channel, expect sellers above and a second leg down, which the bears get here. 1, pullback 2. Bulls might buy here, high 2 buy near support. 31, a good buy signal bar, but maybe strong enough micro channel here that this might need a second entry long as well. 31's an okay stop order buy, expecting or betting that the tight channel is getting a high 2 pullback, and then the bulls will get a second leg. But the bulls get bad follow through. Here for the bears, it's 3 legs down. 1, pullback, 2, pullback, 3. There's probably buyers below here. Expect buyers below 31. And then instead, bar 35 is a big bear breakout bar. That's a surprising bar. The bears are getting an endless pullback. The bulls are hoping tight channel, maybe high 1, high 2, maybe they get a high 3, bull flag, and trend resumption. But instead, we get the big bear breakout bar on 35. And that is trapping traders, the traders who were betting that the bulls would get trend resumption. Anyone who bought through here is getting trapped by 35. And the bears who did not sell because they saw 3 legs down to support, they're also trapped out of a winning trade. 35 will probably get the second leg down. And then 36, testing support to the left. Also a measured move target based on the height of the channel. Some support in this area. Because we're testing support, we might bounce here, but the breakout is strong enough. Bear breakout 35, follow through bar 36. You have to expect that the breakout will get a second leg down. 36 is a bad stop order buy. There's probably sellers above. And then 37, a strong bull reversal bar, testing, let's see, to the left, maybe the bar 8 high, it's a breakout point. You could say the bar 11 low, the bar 14 or 15 low is also support. So we are testing an area of support, but the sell-off is strong enough that we're probably going to get a second leg down. Strong enough reversal bar 37, it may get a small second leg of its own before the bears get their second leg. Not a great bar to sell above, but bears will probably sell above 36. And then the bulls end up getting a micro channel here to 39, but look to the left, we're testing a breakout point. Whether you call it the 31 low, the 34 low, either way, the expectation was buyers below here, but instead we got the big breakout and follow through. So these lows become a breakout point that are expected to act as resistance. So micro channel, but bad context at resistance. Strong enough micro channel, there's probably buyers below 37, but buying here is not ideal. another big down, big up situation. Both the bears and the bulls are expected to get a second leg. Bears expect a second leg down after this deep pullback. Bulls expect a second leg up, but they may get a deep pullback of their own as the bears get their second leg. And then you can see the market's reaction to resistance on bar 41. Strong bear bar in the direction of the bear breakout. It's a lower high. It's a strong signal bar. It's probably going to get a second leg down. Always in short below 41. Follow through bar 42. Breakout follow through. Probably sellers above 42. Expecting a second leg down. So minor reversal more likely here. And we start to go sideways for 3, 4, 5 bars. Limit order market. Expect sellers above bars and buyers below bars. So traders will sell up here, buy down here, sell up here, probably buy down here. Tight trading range through here, continuing for a lot of bars. Ultimately, it's probably close to 50-50. The bulls may get a second leg up. The bears may get a second leg down. And then it looks like we might be getting a second leg down, 57, breaking below the bars to the left. Maybe it's a wedge, 3 legs down, 57. Maybe we bounce here. But is 58 strong enough to reverse the 5-bar micro channel? Probably not. Better to buy a second entry long, so there might be more sellers above 58. And the bears end up getting more down here, the micro channel continuing. Micro channel from 53 all the way to 62, which is good for the bears. But bigger picture, it might be 1, 2, 3 big legs down in a broad bear channel. Also approaching support once again. The bar, you use the bar 37 low. I have the bar 8 high drawn here. And remember I said back here, after the micro channel, the expectation, it's probably a trading range. Big down, big up. Traders are selling high. They're probably going to buy low, so probably buyers below 37 here. So as 63 breaks out, it's a great micro channel, but the context is bad because we're testing support. Also, bar 9's a bad stop order buy, signal bar. Like I said back here, the expectation was sellers above and a second leg down after the micro channel. Second entry long would have been better, but 10 was a surprising bar. So these highs act as support. Bar 37 tested the bar 8 high, the market bounced. Bar 63 testing them once again. Can the bears get follow through? But then we had a bull bar closing on its high, 64. So bears might exit above that bar. Bulls can buy. Second entry long would be better because it is a micro channel. And there hasn't been a great trendline break yet. Small trendline break, 65. Now there's probably traders buying below this bar. Anybody who sold at close 63, disappointed by the reversal, they're probably going to buy below 65. And then 66, a breakout bar. Now it's a 3-bar micro channel, second leg up, likely reversing at support. Overall, it's a trading range day. So strong enough bull breakout, it'll probably get a second leg up. Probably traders buying here, willing to scale in lower, betting that the bears who sold here are trapped and disappointed, and that the bears who were once selling back here are now trapped and they will buy back shorts if the market gets back down here. Bulls continuing to get immediate follow through. 4-bar micro channel. You can see the tail on the bar. Traders are selling once the market reaches resistance, selling into the close of the bar. But it's a bad stop order sell, 67, probably buyers below. Traders buy the close, the bull breakout continues. Kind of similar to bar 12. Even if you buy 68, you're buying near resistance. It's not an ideal location for buying, but the momentum is strong enough that even if you buy here, if you're willing to scale in lower, use a wide stop, the probability is high that you'll capture a second leg. 69, bulls losing momentum, a much smaller bar on 69 as we approach resistance, but bull micro channel, expect a second leg, expect buyers below 69, minor reversal, 70 reversal bar, but a trading range bar, and after a bull breakout, more likely buyers below 70, and we went sideways for a few bars. Bears trying to get the breakout, but looks like a minor reversal. Not enough selling pressure to expect a reversal. We are at resistance, so for the bears it's okay, or it's reasonable to think about selling here, but the bull breakout is strong enough to expect a second leg up. Maybe a high 2 on 74. Some traders might buy above that bar, but we went sideways for 5 or 6 bars, and it's a trading range bar. Bad signal bar. Might be more sellers above. What about bar 75? You can count 3 pushes down: 70, pullback, 73, pullback, 75. So traders can count 3 legs down against a breakout. The breakout is expected to get a second leg. Bears have a completed structure. Basically, it's a spike in channel on a lower time frame. At a minimum, you expect a test of the start of the channel, which on the lower time frame would be more clearly probably the high of bar 71. So at a minimum, market's probably going back up here before it falls for a measured move down here. Also, the bull breakout likely to get a second leg. All of this looks like a minor reversal. Bull breakout 76, pretty good buy signal bar. High 3, basically a wedge bull flag. Bull breakout, 3 legs sideways to down, and then possible resumption up here. It's late in the day, but so not worth trading, but the price action, I say it's late in the day because past bar 70 may not be worth trading. It's Friday afternoon, it's the end of the week, and there's just not enough time in the day to really manage a trade the way you might want to. But the price action behaves consistently, so it doesn't really matter that it's bar 76 here. The expectation is still that the wedge bull flag will lead to a bull breakout, and that the bull breakout will get a second leg. Bad entry bar, but for the bears it'd be leg 4, probably buyers below 77, maybe buy the close. 78 bull breakout, but failing at resistance. Look to the left, maybe the high close or the high of the day, finding sellers in this area. A smaller second leg, bigger first leg here, pullback, and then a second leg, but traders taking profits at the high of the day at resistance. 78 is a bad stop order sell, probably buyers below the bar. Looks like we're in a trading range here. So traders will buy below 78, scale in lower, expecting a reversal up. 79 a bear bar, but in the middle of the range or closer to the bottom of the range, probably buyers below. Small bear bar, bar 80, still expecting more buyers below. Trapped traders down here, but just about out of time. All right, let's see for stop orders today. For me, stop orders in the first 6 or 10 bars, not really ideal. Even here, well, let me back up. I remember thinking on bar 5, it's a micro channel and the signal bar is weak, but there might be sellers below 5. It's a reasonable sell because you have 3 pushes up to resistance, and bar 1 is still currently the low of the day. So I think there might be a stop order sell below bar 5. Once again, I know the signal bar is weak, but the context is okay. It's at resistance, yesterday's high, and there's 3 pushes up with a lot of overlapping bars. But other than that, through here, stop order is not ideal. And let's see here. 25. So even through here, traders are buying pullbacks in the buy zone of bars or below bars. 25 is a reasonable stop order sell. I thought 31 is a reasonable stop order buy. 35 might be a sell to close bar as you're getting a surprise. You're taking a chance as it breaks below a bear channel line with room to support. 37, bears probably exit. Shorts above 37, expecting a pullback. So some aggressive bulls might buy, but they're buying for a scalp because the bears are still expected to get a second leg down. A better stop order sell below 41, even though it's against a micro channel, the context is good. We're testing resistance, the signal bar is strong. expect a second leg down. This is all limit order trading, not great for stop orders. $64, I said not ideal. Second entry long would have been better. No trend line breakthrough here. 66 might be buy the close. 67 probably buy the close, buy below, buy the close through here. Expecting even any pullback here will probably be minor and lead to a second leg up. 76 stop order buy, but late in the day, so not ideal for taking. And for limit orders today, I was saying sellers above 4, but that didn't trigger. Let's see through here. Sellers above these bars, but those didn't trigger. I said buy the close 12, or even if a trader bought the close 12, use a wide stop, scale in, they're probably going to make money. So where do you scale in? One option is below a strong bull bar, like bar 12. You could buy below bar 12. There's a limit order sell above 15, looking for a second leg down. There's a limit order buy below 16. It's a bad stop order sell below the bar. Limit order buy in the buy zone of 18, or the breakout point high 17. Buy below 20. Sellers above 26. Let's see through here. This became a limit order market once you get 3, 4, 5 overlapping bars. Sellers above, buyers below. So these are limit order sells around this price, and limit order buys down here. Even the traders, you can see the breakout trap traders logic here on 57. If you're buying here or here, limit order bulls buying at the bottom of the range, they're doing something reasonable. It's logical. But if you bought, you might be disappointed with your entry bar 58 and 50 or 57. And 58 gives those traders an opportunity to exit at break even, which they take, and it leads to a second leg down. 64, not a good limit order sell above the bar. Traders might sell above 63, but not ideal to sell above a bull bar. Limit order buy below 65. None of those triggered though. Micro channel. Every low above the low of the prior bar. Buyers below here. 73 was a bad stop order buy. In a trading range, it's a bear bar. You could sell above that high for a scalp. 75 might be buy the close. I said 3 legs down. Buyers below 77. Not sure if we triggered that one. And then I said buyers below 78. This is all in theory, especially at the end of the day. Really not worth taking those trades with so little time left in the day. All right, that's going to be it for today's end of day review. For more price action fundamentals and how to trade price action, you can visit the brookstradingcourse.com. There's a link in the description of this video. Thanks everybody for watching, and I hope everybody has a good weekend.